Hey everyone, welcome back to Will of the Market. Today we're diving into the trade desk, ticker, TTD. What they do, how they compare to peers, the latest price action, and what investors are thinking. Think of this as Mad Men meets Wall Street, where advertising meets algorithm. Let's roll. What is the trade desk and what they do? Let's start simple. The trade desk is a demand-side platform, DSP. In plain English, they build the software that advertisers use to buy digital ad space automatically, in real time. Think of it like an auction house for ads across websites, TV, audio, mobile, etc. Here are some of their core features: cross-channel ad buying, display, video, native, audio, and connected TV, CTV, all through their platform. Transparency and open ecosystem. Unlike walled gardens, the trade desk pushes for better visibility in ad costs, buyer, seller paths, etc. Identity, data tools. They created UID 2.0, Unified ID, a privacy-centric identity solution to help target ads in a post-cookie world. End optimization. They have models that optimize ad spend dynamically depending on performance signals. OpenPath and supply transparency. They've introduced tools to remove middlemen in the supply chain and let advertisers see more clearly which ad inventory they're buying. Because digital advertising is worth hundreds of billions per year globally, the trade desk sits in a juicy niche, enabling brands to spend smarter and publishers to monetize better. Peers and competitive landscape? Who's pushing in the same space? Let's compare. Google massive reach, control of ad inventory, data dominance. Trade desk's pitch is independence, transparency, better control for advertisers outside the Google ecosystem. Amazon advertising deep user data, control over e-commerce interface, expanding DSP efforts. Trade desk is more open, independent, cross-platform, less conflict of interest. One big competitive threat recently. Amazon is pushing hard to capture DSP share, leveraging its data, inventory, like Prime Video, and low fees. That could squeeze margins or steal ad budgets. Also, Google sees the trade desk as a competitor. Sundar Pichai once said, "Competition can arrive from nowhere," and explicitly named the trade desk among emerging challengers in ad tech. Recent price action and what's been happening. Here's where the blood flows, how TTD is trading and what's driving it. The stock is trading around $46.76 USD, as of now, after dipping recently. In February 2025, the trade desk dropped approximately 31% in one day after a revenue miss, despite earnings being okay. This was their first revenue miss in 33 quarters. That revenue miss came amid slower adoption of its next-gen platform, Kakai, and internal reorganization. Earlier in 2025, there was positive news. TTD got included into the S&P 500 index, replacing ANSYS. That's bullish because index funds buying will add demand. Despite the hit, the company still reports growth and big retention among clients. Analyst consensus from Simply Wall Street suggests TTD is trading approximately 51.4% below their fair value estimate, expecting earnings growth of approximately 20.8% annually. Sentiment is cautious. Many investors are watching how TTD competes with giants like Amazon, whether it can re-accelerate platform adoption, and whether revenue recoveries will be strong. Investor sentiment and what people think. Let's look inside the minds of investors. There is regret from those who jumped in early. After a sharp rise, the drop stung many. On forums and comment boards, messages suggest folks believe TTD hit bottom and will rebound if macro turns bullish. Some institutional investors may be waiting on clear signals, especially revenue growth, margin expansion, and competitive responses. Because TTD is now in the S&P 500, passive funds have to pick it up. That gives a floor under trading. The options market and trading volume suggest moments of high volatility. Investors are positioning for big swings. What could go right? What could go wrong? First, the famous line, "I'll be back," because TTD's potential to come back is real, but dangers loom. What could go right? Platform adoption accelerates. Kakai. New tools, right pointing arrow revenue catch up. They defend, increase market share in CTV and cross-channel. Amazon's DSP push fails or doesn't scale, giving TTD rump. Index inclusion support plus institutional flows. What could go wrong? Big competition from Amazon or Google cuts into margins or growth. Revenue misses or slowing client spend. Platform or product execution fails. Macroeconomic downturn reducing ad budgets across sectors. Bottom line. If TTD were a character in Breaking Bad, it's not the monster yet, but it's cooking something potent. The infrastructure, client base, and adaptability are there, but the question is, can it deliver reliable growth in the next chapters? TTD is a speculative but solid tech, scale play. If you believe in the future of programmatic plus streaming, CTV plus data-driven advertising, TTD has a real shot. But you can't bet the farm on it, you need to manage risk. I'd start with a moderate position, not full, and watch upcoming earnings, product momentum, and competitive moves, especially from Amazon. If those go right, upside is meaningful. If they slip, downside is real. If you like this, smash that like, subscribe, and comment, TTD, if you want a deep dive into TTD versus Amazon DSP versus Google ad business. Until next trade, may your gains be calculated, and may the market show you mercy.